Hello, and welcome to Markets in Focus. My name is Joe Bell, and today I'm going to walk you through some of the most interesting financial market themes that I'm observing. So, big inflation report came out on Thursday, CPI, much lower than expectations from many economists and investors. Perhaps some signs that inflation is finally starting to slow. In response to this, confirmed expectations of a 50 basis point hike by the Fed at the upcoming meeting, and Fed terminal rate expectations have come down dramatically relative to 1 week ago. And finally, big news in cryptocurrency world. FTX, one of the largest, if not the largest cryptocurrency exchange in the world, went bankrupt this week. Let's talk a little bit about what happened. So on Thursday, the CPI report came out, top line of plus 4% for the month and 7.7% year over year growth. If you look at core, remember that's without the more volatile areas of the consumer price index, food and energy prices. That was up 0.3% month over month and up 6.3% year over year. Why is this important? Well, you can see there on the chart that monthly gain was one of the lowest ones we've seen this entire year, if not the lowest one since late last year. Also, inflation, it's all about expectations, right? Came in lower than expectations, really saw the market risk on assets across fixed income and equities rebound extremely strong, with many indices up more than 6%. You saw some tech names rebound after lackluster performance during the recent upward move in rates. Many of those big tech names had very strong days to end the week. So what's this mean for the Fed, right? I think it was already priced in of a 50 basis point cut for the month of December. I think that was even solidified more that the Fed, while they're still going to continue pushing rates higher, it will likely be at that 50 basis point increase. The other thing this chart shows, take a look at the red versus the blue. The red is 1 week ago. The blue is after that inflation report came out. These are the Fed fund futures implied percentage rates. You can see that terminal rate before 5.1%. Now expectations drop to 4.9%. A lot of equity investors and risk appetite investors, if you will, welcomed this news. We've seen several bear market rallies with hopes of perhaps peak inflation data, with hopes that perhaps the Fed was going to reverse course earlier than later. This is one of the real good news events, if you will, that has proved those hopes right. And perhaps the first sign, we're not out of the woods yet, but the first sign that perhaps some of that peak inflation data is starting to come to fruition, and we perhaps have seen peak inflation. And finally, crypto, big news in crypto. Take a look at this chart. We look since the all-time high in total crypto market capitalization, total market value back on November 8th of 2021, only a few days ago, $3 trillion, 71%, not 3 days ago, but a year ago, rather, I'm sorry, November 8th, 2021, $3 trillion, all the way down to $900 billion. But what did happen just a few days ago? Well, FTX, the world's largest cryptocurrency exchange, had a bit of a liquidity issue, right? They had a ton of investors looking to withdraw money after there was some reports and documents that surfaced that talked about some hedge fund ties with some of the currencies on that exchange that many people did not think had or should exist. The CEO, very popular for FTX, has come out and basically said he made a lot of mistakes. That wasn't enough because there was a last minute buyout attempt by a competitor. They walked away after doing some due diligence. All of that bad news led to one thing after another. Next thing you know, a few days later, the company goes from $32 billion valuation to filing bankruptcy. 130 different entities related to this cryptocurrency exchange, most of them with more than $10 billion of liabilities or assets, went away in just a matter of days, right? That was a bad week, obviously, for that gentleman. And the cryptocurrency world altogether, that big liquidity crunch and bad news has unfolded to really push prices lower in this environment. And finally, I want to thank everyone for watching, but a bit of news out of the park rangers, if you will, from the National Park Service. There is a toad nicknamed the Colorado toad, but the Sonoran desert toad They have signs for visitors that are warning people, do not lick this toad. All right, that sounds silly, and it is, but why are people doing this? Apparently, the toad, perhaps a protective measure for enemies, gives also a very potent toxin, but that toxin does contain DMT, a very popular hallucinogen that's somewhat well known here in recent years. And apparently some people are starting to lick those toads. So they have signs. It can be very potent and dangerous for people. But beware. Stop licking the toads, people. All right. Leave those toads alone. They didn't do anything to you. So with that, I want to thank everyone for watching and have a great weekend.